Should you buy Dutch Bros stock right now? Well, I'm going to answer that question in this video. But first, before I answer that question, I'm going to review Dutch Bros' latest quarterly earnings results and its forecast for the rest of 2023, using that information to determine if it's a good time for investors to buy Dutch Bros stock. So in its most recent quarter, Dutch Bros revenue increased to 197 million. That was up from 152 million in the same quarter last year. The loss per share improved to 7 cents, up from a loss per share of 10 cents from the same quarter last year. Some of that is due to just more shares being outstanding. Same shop's comp sales decreased by 3.5%, which is a troubling sign for a company that's on such an accelerated growth path, right? Your stores that were open for at least 12 months experienced a decrease in sales year over year. Cash flow from operations improved to 3.1 million. That was a good sign. That was up from a loss of 756,000 in the same quarter last year. The company added 144 company-operated locations and 128 franchised locations in the trailing 12 months to reach 716 locations. That was up from a total of 572 locations in the first quarter of 2022. So you can notice it's on a rapid growth trajectory. However, something that troubled me was that in the first quarter, it opened 45 new shops and 42 of them were company owned, which shows me that there is little appetite for franchisees looking to open new shops compared to the last year when it was roughly even compared to company operated openings and franchised openings, right? So right now, the appetite for franchisees to open new locations is seeming low, and I'm a little bit concerned about that. I would like to see more enthusiasm from franchisees to open new locations because that tells me the business model on a standalone basis is profitable, right? Because if the business model on a standalone basis was lucrative and profitable, more franchisees would be lining up to open new locations because they like the concept, they've seen proven results, and they can see that it's a good return on investment. For 2023, Dutch Bros is forecasting 975 million in revenue. Same shop sales growth of low single digits, that's really good news if the company's forecasting sales growth of low single digits, because in the first quarter, same shop comps decreased by 3.5%. So if for the full year they expect an increase in the low single digits, that means the second, third, and fourth quarter are going to be really good from a comp perspective, right? Comps don't count new locations, so it demonstrates demand for its existing stores if that demand is increasing. If customers are coming in, liking what it has, coming back, and then new customers are coming in to those locations that are already open. Okay? So that's really good news that the company is expecting to see a rebound to an improvement. The company plans to open at least 130 company-owned shops for a total of 150 shops overall for 2023. So it looks like Dutch Bros forecasts a significant slowdown in franchisee demand for new location openings, right? Because over the 150 total, 130 of them are going to be company owned. And that also requires a lot more capital, a lot more cash to get those stores open, which requires a lot more stock selling and borrowing and using up existing capital to get to that point, because the cash flow from operations is not sufficient to drive all of the store growth that the company wants to deliver. So overall, if I was to answer if the stock is an excellent buy right now or if it's a buy, sell, or a hold, I would say it's a hold. I would say the stock is a hold right now. It's demonstrating excellent growth in terms of new locations, although existing demand seems moderate at best. Low single digit growth, decreases in growth. Typically, you don't see companies trying to grow as quickly when existing store sales are so moderate or mediocre, right? Typically, you see this kind of growth from companies that have so much demand and sales are growing so fast that they need to open new locations to meet that robust customer demand. I don't see that as the case here with same store sales decreasing. So for that reason, I'm gonna keep this on a hold, and I'm gonna follow and see the progress it makes, see what kind of improvement, see what the second, third, and fourth quarter looks like, and I'll keep you posted on if my recommendation for this stock changes. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.